All right, welcome back, everybody, to another edition of Market Talks with Dr. Stoxx. This is Dr. Tom Carr, aka Dr. Stoxx of drstoxx.com, drstoxx.com. We're coming to you from our live trading room over in Discord. And if you want to join us and watch what I'm trading throughout the day, join us in the afternoon for Market Talks, and you'll get everything that I'm doing with options, stocks, micro E-minis, and on and on. You can click on this live trading button right there, and that'll take you to the page where you can join up and join us in the live trading room. All right, we're going to go over to some charts, and that's not charts. There we go. And I'm going to focus on just a handful of charts today. So we're not going to do our usual routine of going through lists of this or that. We're going to take a look first off at the S&P 500. Let me get some of these indicators off here. Give us a cleaner look. And I'm going to go to the weekly chart, and let's see if we can figure out where the market, this current trend, which is clearly an uptrend, no doubt about that, stacked MAs, rising LRC, whenever it gets down into the pink zone or anywhere near the pink zone, it rallies higher. So let's see if we can figure out where the market is most likely to peak from a technical perspective. In order to do that, we really have to get quite a bit of data on here. One problem with these data points is that we've got an outlier right there. That was a big crash and down in early October, middle of October, which proved to be the kind of the last ditch effort of the bears to continue the 2022 bear market. It didn't pan out, and the market has really been strong ever since. If we take a trend line under the lows from that point, it's not going to intersect a whole lot of them, so this is a little bit problematic. But if we stretch it out, and then we put a line over the top of the highs, and we stretch that out, this is a technique, by the way, that I teach. Let's not put it back there. Let's put it right there, that big cluster. This is a technique I teach in my Chart Reading 101, how to use support and resistance trend lines to project out the most likely path of the market going forward to see where it might peak. And where those two lines intersect is where the market should peak. Well, how about that? So it's just a little bit above 7,000, 7,100, 7,150, something like that. We could also predict when that market might peak, and the peak would be coming somewhere in November. So according to the path of least resistance per support and trend lines, i.e. basic technical analysis applied to the weekly chart, applied to the current trend, we should see this trend continue up over 7,000 sometime in, let's say, the last 3 or 4 months of the year, next year, 2025. At that point, we should see this trend begin to normalize a little bit. Could be a sideways trading range for a few months. It could be a bear market, probably not. Could be something a little more volatile, but that's the projection. Now, let me show you a projection from someone who is a little more astute at these things than I am. I happen to have the PowerPoint here of Mike Lee. Mike is a professional analyst, fund manager. You'll see him quite a bit on CNBC and Fox Business and other financial shows. He's a regular. He's had some very good predictions. His prediction for the S&P 500 going forward is 7,000. How about that? Pretty close. Ours was a little bit more optimistic. If I had the lines just right, ours is a little bit more optimistic, but I'm just basing this on technicals, not basing them on fundamentals. he's really looking at the S&P as a function of GDP. He sees GDP rising up and also a function of earnings power of the major companies in the S&P 500. And based on his projection, 7,000, he says, coming somewhere in the middle of 2025. So I have the peak out to November. He has it more somewhere in June, July. And at that point, then things get a little squirrely, right? He sees a dip down for about a quarter and then a rally back up toward the end of the year to about 6,600. That's his map, his path of least resistance for next year. All right, well, fair enough. It's based on earnings power, it's based on GDP. There are two key headwinds that he points out that I totally agree with. And I've been saying this actually for a few weeks myself, ever since the election. There are two key headwinds that the market is going to have to deal with that the market has not yet priced in. In both of these cases, it could be a total nothing burger. If both of these are a nothing burger, then we may not see 7,000. We may see something more like 73, 7,400 by the time we get out to the end of the year. We may not see that dip in the third quarter. We may not see 6,600 as an end of year projection. We may see something much, much higher than that. The two things that he's most worried about, I totally agree with this. One is, if I can remember, well, one I know is the tariffs, right? So we've got this problem with, do I have to spell it all the way out? Anyway, it's so hard to do this with the mouse, right? Tariffs, there you go. So that looks like tariffs, but it's tariffs. So if Trump is successful in placing 20%, 25%, 50%, he was talking about 100% tariffs on Mexican products, putting them on Canada, on Mexico, on European, on NATO nations, and China, right? Probably is going to do that with China, just like he did in the first presidency. But a lot of tariffs going on in our trading partners is probably going to slow trade way down, probably going to make our goods and services that much more expensive, and may not be the best thing for the economy, right? However, I do think tariffs are probably just much more of a bargaining chip than something that's actually going to take place, with the exception of China. And we did weather through Chinese tariffs in the first term. I think we'll do okay with Chinese tariffs in the second term. All right, so that's one problem that the market may have to price in, and which it hasn't done yet. The other one is the Department of Government Efficiency. Sorry, not spelling that very well. The Department of Government Efficiency. So likely also a nothing burger. Likely it's going to be a lot of saber rattling, and the Department of Government Efficiency does not have legislative powers. They can influence, they can put out studies, they can make threats even to certain people that are pulling the levers of regulation. But until actual agencies get shut down, until government spending gets reined in, an actual fact, the Department of Government Efficiency is probably going to be a lot more noise than substance. So if that's the case, then the market shouldn't have to worry too much about the reining in of spending. Why is that even a problem? Well, it's not a problem for the overall economy in the long term, right? We want to see this debt come down. We want to see how much interest we're paying on that debt come way down. Nobody likes government waste, but when the government spends money, the GDP goes up. If the government starts cutting back on the money it spends, the GDP is going to go down. GDP goes down, you're going to see the dollar go down, you're going to see the market go down. So those are the two things. Those are the two headwinds that he thinks is going to cause that dip in the third quarter of 2024, if in fact they do materialize. And if they don't, I think we probably will end up higher than 7,000. But somewhere, 6,600 would be a good 10% run from here. And 10% is a pretty good year, right? It's above average, and that's not even counting dividends. Oh, here's the other thing I wanted to let you know too, and I just learned this today from someone in my pro trader group. There have not been very many periods in the market going back 100 years or so, where you have 2 years. Where's my number there? 2 years of back-to-back returns in the market above 20%. It does happen, but it doesn't happen very often. It's happened, in fact, 5 times in the last century, where you have back-to-back markets in the S&P 500 above 20%. Well, what happens in the third year? What happens in the third year? Well, it's not such a good picture. And I'm not exactly sure what causes this other than just kind of slowing down in momentum and the market having to price in certain things. But the third year tends to be a loss, tends to be not necessarily a bear market, but down 3 or 4% on average, right? Of those 5 instances where you had 2 years back to back 20% or more. And what happens on the third year? Third year does tend to be down. Now, there was one exception to that where you did get a positive third year, but it wasn't a real big year. It wasn't like 7 or 8% an average return. Okay. So those are things to consider about 2025. I do think personally it's going to be a bit more challenging, but I think the challenges will come later in the year, not so much early in the year. It has a lot to do with how Trump rolls out regulations. If we see tax breaks, if we see corporate rates coming down, if we see capital gains taxes get slashed, those are going to be near-term stimuluses for the market. If the Fed continues to, even in a very slow fashion, continues to reduce the lending rate, which we're probably going to see next week by 25 basis points, if he does that a couple of more times, if he doesn't hike at all, and at least starts to maybe grease the skids a little bit, we should have a very good first 6 months of the market. So, do we have to worry about any of that now? No. Are we in a really nice market right now? Yes, absolutely. We're making all kinds of money in this market. We have been all year long. Even shorting stocks, right? What my momentum letter, which has aggressive long portfolio, a conservative long portfolio, and a short stock portfolio where we short momentum stocks for a week, it's just off the charts. It's up over 1,000%. Just crazy, crazy returns. Shorting momentum stocks. Why is that? I don't know. What does that say about the market? I don't know. But it's been fun. It's been a lot of fun. All right. So according to technicals, 7,100 or so should be the top sometime late next year. According to Mike Lee, 7,000 is the top somewhere in the middle of next year. We'll see who's right, shall we? Let's see. Maybe Dr. Stoxx is the next Mike Lee. Probably not. Definitely not. All right. So that's the S&P 500. For right now, everything is just bullish, 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 despite the fact that we did see, as I've been showing you for the last couple of weeks, despite the fact that we're starting to see a little bit of concern up here off the top, right? We're getting these kind of big, weak downs. This is a daily chart. Sorry, we're seeing these big slams down, these big red sticks, fairly high volume. However, if you look at the aggregate of volume and price, it's still really bullish, still very bullish. Every dip, even the bigger ones, the stronger ones, like this one right here, right? 4 red sticks in a row, 2 of them really big slams on heavy volume, hit a trend line, and then boom, right back up again to the top. Even this week, I thought we were going to have a much softer week than this. I thought we were going to get 3 or 4 days heading into CPI, PPI of some softness, but no, it was a 2-day slide, Monday and Tuesday. That was it. And today, right back up again. All right, so I wanted to take a look at Bitcoin. We're back up over 100,000. It is in a very tight trading range here, so we can't get too excited yet about getting back up over 1,000. It is very likely that we'll be right back down to 97, 98 in the next couple of days. But what is good here is, what it was very bullish here is that the lows of each of these dips getting a little higher each time, a little higher each time. We're starting to reach up to a level, a ceiling up here around 102, 103. We're knocking on that door more often than we're knocking on the lower end of things, and that is likely to open it up. 125 is my kind of term target, and I'm not saying by the end of the year. I think probably April or May we should see 125. But the thing is that you're going to get some consolidation along the way, and that's exactly where we're at right now. We're just in a period of consolidation. It's not a real good trade, but we are long Bitcoin. We're leveraging it with some MSTR and COIN. We've got IBIT on board. We've got ARKB on board. Um, Bitcoin is just the place to be. It really is for the next, I don't know how long until government shuts it down, but I don't think that's going to happen in this administration. So we're good for at least another 4 years, right? So Bitcoin is good. It's bullish. It's just not like you're going to, the guys that bought Bitcoin at 1,000 or 2,000 and they're driving the Ferraris now, you're not going to see that kind of a run for a long, long time. If you buy it today and hold it for 20 years, assuming government is okay with it, because it could shut it down tomorrow. That's the only problem. That's the risk. There's political risk. As long as the governments are okay with Bitcoin, it should be 150, 200, 250, 300, something like that, further on down the road. It's got that kind of potential. And there are all kinds of ways in which Bitcoin, as a limited commodity, is going to be even a stronger asset value than gold. All right, I want to show you small caps. So we are long small caps in the trading room, and this has been a very nice trading chart. Right, the S&P, the QQQ is a little bit less than this, but the S&P has not given us much in the way of pullbacks to enable us to kind of get on board with a lower risk entry, right, with a tight stop. The small caps is an exception to that. It has been giving us these nice entries. We've taken advantage of them. We're also selling premium on TNA week after week after week, and this week is another good example of some profits. I'm not sure we'll make full profits, but we're going to make some profits. We bought the Micro E-mini yesterday on the dip to the 21 period moving average, right back up today on the nice bounce off CPI. But here's the thing about small caps. It's doing this thing where it's not a perfect pattern every time, but you get the dip down, right, to take out the risk of the trade, and then hit support of some kind, bounce right back up strongly, back down, back up, back down, back up, back down, way up, back down, strong, back down. So you don't want to buy up here at the top. Right? I hope that if you've been with me long enough, you know that you don't buy up here at the blue zone. You try to buy down. There are exceptions to that, but for the most part, buy off of some support. 21-day moving average is a good one. The midline of the LRC is a good one. The 50-period moving average is a good one. The pink zone of the LRC is a good place to buy support. So we can do that with the small caps. Tom Lee is convinced that there are 4 places you need to put money for 2025. I think this is certainly true of the first half of the year. I'm not so sure about the latter half, but you want to be in small caps. You want to be in Bitcoin. You want to be in the banks. And what was the other one? There's a 4th one in there somewhere. What is it? It'll come back to me. Anyway, those are three good sectors to focus on for the next 6 months or so, 6 to 7 months. Okay. Okay. Two charts I want to look at, and then I'll take just a brief small set of chart requests. Let's take a look at NVIDIA. So NVIDIA, there's some really good things going on in this chart, right? We've got the uptrending LRC. We've got the stacked MAs, 21 above the 50, 50 above the 200. The 50 and the 200 are rising. So we have a long-term uptrend. We've got the intermediate term uptrend. The short term, it is sideways. Very, very, very much of a sideways trading range. Now, trading ranges can be very profitable, but you can't buy them at the top. You've got to buy them at the bottom. Well, of course, right now we are, especially yesterday. Yesterday was a great day to add some NVIDIA. I know some guys in the room did that yesterday. Good on them. Today is the confirmation of a bounce higher. We're trading near the highs of the day. We're still below yesterday's high, but it looks to me like this is the start of a new bounce. Now, we can't get too excited because 148, 149 is the top of this range. However, the more often you hit the top of the range, the more likely it is, especially in an uptrending chart like this one and a big stock like NVIDIA, the more likely it is to break out and give us that nice run into the blue zone or better. So a buy today, which I will probably do in the live trading room, and we'll probably use NVDL. We might use some calls, is a good idea, I think, going forward. Now, there are three problems with NVIDIA that I think are causing this trading range and are likely fully priced in already, but there's a chance that, details of these might still come forward and cause some headwinds. We've got China threatening some kind of antitrust regulation on NVIDIA in China. So that's a problem. You've got Google coming out today, and this is, I think, very bullish for NVIDIA that it didn't get all panicky about it. But Google came out, I guess was overnight, and talking about their new AI chip, which is super, super fast and could be a direct competitor to NVIDIA's microchips. So that's a problem. And what was the third problem? Well, maybe it's just a general problem with the lack of relative strength in this sector, because the number of really good names in the sector like Intel and AMD and Qualcomm that have just not been good at all. So those are problems. So you've got headwinds, right, for NVIDIA. But given those headwinds and given this 2-bar reversal we've got going on this week, coming out of the pink zone of the uptrending LRC, and as I like to say, this is my mantra: buy the pink in an uptrend, sell the blue in a downtrend. And here we are. We were in the pink yesterday. We were in it this morning. Looks to me like this is a good buy signal for NVIDIA. So that's one chart I wanted to recommend to y'all. And then lastly is LABU. So LABU is the 3x bullish version of certain biotech companies. And these tend to be the ones you find in LABU tend to be the companies that are a little bit more on the speculative side. They've got a great pipeline, perhaps, but they don't really have much in the market just yet. And so they're very sensitive to these binary events, an FDA approval or disapproval, phase 2, phase 3 trial data coming out. It's not about earnings with these guys. It's about their pipeline. And so it can be a real exciting trade when things go well. It can be a really painful trade when things don't go well, right? And here's your classic example. Big up a few weeks ago, huge, massive down. We actually got sidetracked in some of this. We were holding some puts that we were selling deep out of the money as a wheel play, and making good money all throughout this area in here. And then we got slammed and we lost most of that. We didn't lose it all, but we lost most of that profit in 1 week. It was just very, very nasty. It does happen. And this is why we kind of shifted from doing the wheel play as our income strategy to the diagonal debit spread, which is your risk is capped. There is some headwind you got to work through on a cost basis, but once you get past that a couple of weeks out, you start making good profits with the diagonal debit spread. And so we've been doing that. And I'm not sure LABU is ready to do either one of those, but a little bit of a nibble, a lotto play here as we are coiling up. Here's the thing. We're moving from low to high. We're halfway there, or we got about halfway there, maybe a 40% of the way there. Now we're coiling up in this little sideways trend. Yeah, it's not the best looking chart. The LRC is falling. The 50 is above the 200, but just barely. The 21 is below everything. That's not so good. Price is below 21. But I think it's just like a sense, a spidey sense. And I'll show you the hourly chart, which confirms that we're not going to see a close below the bottom of this box. Yeah, it may be a little trouble getting to the top, but 116 to 127 is a pretty decent trade, right? A decent swing trade. And pretty good chance, I think, because it is on the way up, that we'll get outside of that box and we'll see a good run, maybe up to the mid 140s or so. Let me show you the hourly chart. And this is where you're going to see this is where you're going to see what I was seeing earlier today when I was in the room and I was saying, I kind of think maybe it's time to jump back into some LABU just as a little nibble, right? Just a fun money trade. If we lose it all, not a big deal. We wouldn't lose it all anyway. But here it is. So you've got an uptrending LRC. You've got the 50 above the 200. Yeah, the 21 is not looking so good, but you did come all the way down into the pink zone early this morning, right off the bell, and it's been upside since then. Volume is not looking that good right now, but as I like to say, buy the pink in an uptrend, sell the blue in a downtrend. It may be, now that we're back inside this yellow box, it may be that this trading range will hold, that 116 is the low, 127 or so is the high, and we can trade it all the way up there. If it breaks out, we can hold on to it even longer. So just a thought, going to talk about that back in the room, and I think we'll probably jump into a NVIDIA trade of some kind. I wouldn't even be opposed to doing a wheel on NVDL. They have very good options, lots of premium. It's only $70 stock instead of 130 something, and that may be the way to go. All right. Let's take a look at just a few charts here. Let me get back to the daily chart. Some of your requests. Also, the other thing to note here about in LABU is that it is in an expanding range, although I might be not very fair in putting it all the way up there. I guess that still is an expanding range. And when stocks do a widening range like this, it's sometimes called a megaphone pattern. I like to call it price exploration. It's sort of pushing the highs a little higher, the lows a little lower. And it's the stock's way of kind of figuring out where the lines of support are. You know, you break the support from the previous pivot low, but then you bounce cleanly from that, puts a lower low, and then you get all the way up to the top. You push that pivot high a little bit higher, and then it falls from there, right? That's an expanding range. Now, you do tend to see that. You tend to see these expanding ranges either at the top of uptrends or at the bottom of downtrends. And if we look at the weekly chart of LABU, you're going to see that this is the bottom. It is the bottom of a downtrend. And even on a on a weekly chart, we've got an expanding range that is, really expanding, right? Really, really expanding. And even then, we're somewhere in the middle of that, range. Maybe. I'm not an expert at placing these trend lines. Not that anybody is, because they tend to be a bit subjective. But if that is correct, then we're looking at not so much an expanding range. We're looking at a new uptrend off of a long, and very steep. All of these are reverse splits, of course. Very steep downtrend. So maybe the speculative biotechs, which should have a better macro because of falling rates, lower regulations, right? Corporate taxes getting off the table. And although the MAHA segment of the administration, the Make America Healthy Again, may pinch some of the bigger pharma players, right? Your Mercks and Pfizers and Novo Nordics and so on, with some scrutiny that they're not used to having. I think the little guys, the little biotechs, will probably be able to slip under the radar and do their thing, right? They can go after the what do you call the medicines that are dedicated to rare diseases, right? There's not always a big market for that, but they can make a very good profit from that, because if you have a cutting edge product in a rare disease segment, you're usually the only player there. So you've got you completely own the market. So that's what a lot of these little guys are hoping for. All right. Let's see what you're interested in. SMCI. Oh, boy. I said in the room and on Stock Twits and Twitter that this still stinks. It's just a really, really bad looking chart. And I know when you go to when you start looking at their valuations, their growth rates, sales, um, free cash flow, right? Price to book, these kinds of things that really mark the value of the company, they're very good. They've got very good numbers. I don't know exactly what the problem is, other than they had this accounting issue and they got threatened with delisting. And then they came out and said, "No, that's not really much of an accounting issue, and we're not really going to be delisted." But the market hasn't responded yet to that. Although I suppose this is the response right here, and now we're kind of rolling back over again. Why isn't this gapping up 20% every day on that kind of news? I don't know. So that's a major concern. We've also now broken this little relief rally. It is a sell the blue in a downtrend kind of moment. Yeah, there's a catch today at the 50, the 21 period moving average. That's a positive. It's a little bit of hope. But until it gets back up above that, until it actually gets above, what did I say was 50? Like 48 to 50. Until it gets back up above that line, it's very much of a no-go zone. Now, it's possible. I'm just looking at it. This is the first time I've seen it. It's possible that this is a bottom, right? And we're getting now the right shoulder. And if that's the case, then that would be really, really good. Technically speaking, you start to build out that right shoulder, you start to get back up towards 47, 48. Then I would be interested in adding some shares, nibbling on a little bit, maybe buying some long-term calls. But not until then. No, it's just he's just not in favor with the market. Market still doesn't like it. HOL. Okay, so that's the fourth sector. The fourth sector of Mike Lee is industrials. Um, I guess because of infrastructure spending, I suppose, lower regulations, lower tax base might be very helpful to a company like Honeywell. So we'll have to see. But that's one of the four sectors he likes going into next year. So this is a pretty good chart, right? We are in that uptrend. We tried to break out. So this is what I call a power gap, right? You get up to 52-week highs. Ideally, you don't want to see that gap close. Well, it did pretty much close. It hasn't gotten below that, so that's one little sign of a positive basis there. We're holding above the 21 period of average. That's good. Above the the midline of the LRC. That's good. Tried to break out today in a very nice market. It's just not very good for industrials. The XLI is down. The Dow Jones Industrials are down. So it's not across the board. All boats are being lifted by the rising tide. It's not that kind of market today. But I say this is pretty good. If you're already long, it's a hold. If you're not yet long, this is what I would do. I would wait until it either pulls back to the 21 or the midline, nibble there, or wait until it reverses back up and breaks out, officially closes outside of that falling wedge. Yeah, it's not a bad setup at all. It just today it's either a hold if you're already in, or it's not a buy. It's a wait and see just yet. GEV. Yeah, this is good. This is a defense contractor spinoff of General Electric. Very, very nice looking chart. Everything is rising. The stacked MAs doesn't have a 200 yet because I think it's still too new. And this nice tight base, high tight base, you need to see about 3 weeks. It looks to me about 4 or 5 weeks here. And the volume balance, I have to say, is a little bit mixed, but that could be overcome. Today is very good, right? 3-bar reversal, back up to the highs, very good volume coming in. And it may be that the bears did try to slam it and couldn't. They tried to slam it and they couldn't. And that's bullish. If the bears aren't able to get it down and knock it down below a certain level, and every time it gets to that level, it bounces right back up again, that is not bearish, that is bullish. So I like this chart. In fact, I like it so much, I'm going to add it to my greens list. I haven't had it on my greens list for a while. We were in GE for several weeks taking premium from that, but this looks even better. Okay, CRM, we're actually long already, and it's a power gap, a little bit of a pullback. Today's the bounce higher. It's just bullish, so you just have to be patient. It's not a big mover. The FSLR is your your second best play in the solar space, ENPH is still my my number one best of breed product in the solar realm. But the whole sector has been off limits for me. It's a no go zone. Everything is downtrending. I'm not so sure half of the solar companies that are working today are going to be in business 5, 10 years from now. Uh, we've got solar panels on our roof. I'm a believer in them in theory, but I have to say the performance, and we've got ENPH as semiconductors on the roof, not working that well. We still have to, during most of the summer months, we've got the AC running all the time. We still have to pay the electric company. And we're in Florida, right? Southwest Florida with plenty of sunshine. So I'm not a big fan. I'm not a fan of solar, and I don't think the companies are going to be doing that well. And I think you're also entering in an administration that may be not as supportive of the solar industry. I don't know. Musk is, right. Musk is huge on solar energy and electric vehicles. So, and if anybody can make it work, he can. But right now, current technology is not that great. So there's still some work to do. I would just avoid it altogether. Let's focus on charts that are going up. Let's focus on companies that are expanding their cash flow, that are growing like crazy. Um, that's where we want to be. LABD. Let's just do a couple more. So we were just looking at LABU and thinking about it as a long. I have to say, LABU itself, the chart not looking that great, but it's not that bearish either. There are some reasons to believe it's going to go higher. And then the same is true with LABD. There are reasons here to believe that it's going to go lower. We do have a slightly downtrending LRC. We've got the 21 below the 50. You had a very bearish fall right here. This, of course, is a rise in LABU. This is the fall in LABD. And now a coil underneath the 50-period moving average. It did try to break out this morning, which means that LABU was trying to fall this morning, and it bounced right back up again. LABD fell back down again. Not a real good setup either way, but I don't know. It's one of those intuition things. When you've been trading for 23 years, you just kind of have a feeling for some of the setups. Now, I don't trade on feelings, of course. We look at objectively the charts and the fundamentals, but just have a sense LABU is going to get back on track. We'll see. ACN. Let's make this the last one. Okay, so this is good. Yeah, this is a good looking chart. We've got your symmetrical wedge forming right there. We're banging up against the RTL at the top, which is a good bullish sign. It's going to be, I'm not sure you want to hold over earnings. Last time was very good, a gap up. Before that, also gap up. So it could do okay on earnings. I've been shying away from holding anything over earnings except my long-term positions. But with that aside, just on the chart basis, this looks very good, right? You've got very good volume balance down here, mostly bullish inflows, not so much outflows. You did have a fake out breakout right there that trapped some bulls, but then it bounced right back up again. And it bounced yesterday when a lot of stocks were down. Follow through today. So this is pretty good. Yeah, I have to say, this is a good looking chart. Bullish. If you're long already, you can hold it. If you're not long, thinking about getting long, I wouldn't hold it against anybody for starting a new position today in anticipation of the breakout. You'd put your stop underneath yesterday's low, which gives you about 9-10 points to the downside, and then trail it up from there. All right, guys, I'm going to let you go. God bless everybody. I'll be back in the room in just a few minutes after I produce the video, and we'll go from there. God bless. Bye for now.